Alright, listen up because what I'm about to tell you is going to shake you to your core. Japan is about to trigger the biggest financial crisis since 2008, and most people have no idea it's coming. The dominoes are already falling, and when they're done, your investments, your retirement, even the money in your wallet could be worth a lot less. This isn't fear-mongering. This is reality. And by the end of this video, you'll understand exactly why the next few months could change everything. So here's what's happening. Japan is trapped in a financial death spiral with no easy way out. Japan just launched a massive stimulus program worth $135 billion. When a government prints money equal to 3.5% of their entire economy, they're not solving problems. They're creating bigger ones. Think of it like this. Imagine your household is struggling to pay bills. Instead of cutting expenses, you just print fake money and start spending it. Sure, you can buy groceries this week, but eventually, that fake money becomes worthless. That's exactly what Japan is doing on a massive scale. And here's where it gets really bad. Japan's currency, the yen, is collapsing. The scary part? The yen is falling even faster than the dollar. When your currency loses value against another currency that's also losing value, something is seriously broken. A weak currency means everything you import becomes more expensive. Japanese families are watching their cost of living skyrocket. But it gets worse. Investors are dumping Japanese bonds like they're on fire. In just 1 year, interest rates on Japan's 10-year bonds jumped by almost a full percentage point. The 30-year bonds spiked by half a percentage point in just 1 month. That kind of movement usually takes years, not weeks. Insurance companies and pension funds are panicking. Normally when a currency collapses, you raise interest rates. This fights inflation and strengthens your currency. But Japan can't do it. Japan's debt is over 230% of their entire economy. The Bank of Japan owns almost half of all Japanese government debt. The government is literally borrowing money from itself. Just paying interest on this debt costs Japan 25% of their entire government budget. If Japan raises interest rates, that could jump to 40 or 50%. The government would be completely paralyzed. So they're stuck. They can't raise rates without destroying their budget, but if they don't, their currency keeps collapsing. And then there's China. Japan's biggest trading partner is turning its back on them. Chinese tourists visiting Japan dropped by 45% in December. That's nearly $10 billion vanishing. China is also restricting exports of rare earth materials that Japan desperately needs for semiconductors and electric cars. China controls over 70% of Japan's supply, and exports are already down 8%. So what can Japan actually do? There's really only one move left. They have to sell their massive pile of U.S. Treasury bonds. Japan owns over $1.2 trillion in U.S. government bonds, more than any other country. They sell those bonds, get dollars, then sell those dollars to buy back yen. But when Japan dumps U.S. bonds, it triggers chaos in American markets. Scott Bessent, the U.S. Treasury Secretary, is already calling Japanese officials begging them to stabilize things. And Japan has tried this before. Since 2022, they've intervened 4 times, but it only worked for a few months each time. So they can't stop. We're talking hundreds of billions in U.S. bonds hitting the market. When that happens, U.S. bond prices fall and interest rates rise. Mortgages get more expensive. Car loans get more expensive. The entire American economy feels the pain. But there's an even bigger danger called the yen carry trade. For years, Wall Street has been borrowing yen at 0% interest, converting to dollars, and investing in U.S. stocks and bonds that pay 6% or more. There's about $450 billion in these trades, many using leverage. If Japanese interest rates spike and the yen gets stronger, all these firms have to pay back their yen loans. But now they need more dollars to pay back the same amount of yen. They're forced to sell their U.S. stocks and bonds to cover losses. When everyone sells at once, prices collapse. Japanese investors own over $2.2 trillion worth of U.S. stocks and bonds. If they start pulling that money out, it triggers a massive sell-off. And once that starts, investors from Europe, China, the Middle East all start selling too, just trying to survive. So is there any way to stop this? Honestly, it's going to be very difficult. Japan can't raise rates without destroying their budget. They can't print more money without making inflation worse. The Prime Minister is trying to convince people her tax cuts won't require borrowing more. And if that's true, there's only one place to get that money: selling U.S. Treasury bonds. The floor could fall out from under U.S. markets in the coming weeks or months. Japan's crisis isn't just Japan's problem. It's connected to everything. Your 401k, your stocks, the value of the dollar in your pocket. When the world's third largest economy is on the edge of a cliff, we all need to pay attention. So what do you think? Can Japan find a way out of this mess? Or are we about to witness one of the biggest financial unwindings in modern history? Drop your thoughts in the comments and stay safe out there.